I know that when you invest money, you take a leap of faith and you put your trust in us to choose who should be managing your money. A long-standing client said to me recently, look, we know you know what you're doing, but could you tell us what you're doing a little more often? Maybe in your weekly newsletter, which I thought was a good idea, particularly as in most of the annual reviews we've been having with clients, we're having to admit that for the past 18 months or so, they would have been better leaving their money in the bank. But only just in most cases, because remember that interest rates only started to increase towards the end of last year. And it's been the rise of interest rates which has had probably the most effect on the returns from stocks and shares, and not necessarily in a good way. This is changing, however. You'll know from previous chats that we work with a selected number of portfolio managers to whom we delegate the day-to-day decisions about where and which underlying funds to invest with. One of these is Tatton Investment Management, and their Chief Investment Officer gives regular, at least twice weekly, video and written updates, more if we ask for them, on what they're doing and thinking. Now, the latest was on what's been happening with so-called cautious or defensive funds, which we always say won't make you a fortune, but shouldn't lose you on either. Well, in recent months, that hasn't been the case, as the safer fixed interest investments that those sort of funds hold went down in value quite sharply as interest rates rose. Now, as the investment manager Lothar Mental points out, the new interest rates are included in these funds. The underlying investments, the bonds, the fixed interest securities, all now have higher rates attached to them. So the returns from these funds will turn around, and they should be the right place to be, and certainly start once again to beat investments in the bank. Because we always say you will always do better than you will leaving your money in the bank, and beat inflation by investing. But it won't happen in a straight line, and you have to be prepared to hang on in there. And that, for sure, hasn't changed.